South Africa's jobless rate has continued its upward trend. It's increased to 33.5% in the second quarter, marking its highest level in 2 years. According to Stats SA, 158,000 citizens joined the country's unemployment line during the period, and most of those job losses were recorded in the trade sector, followed by agriculture. Mining production has come in lower. Output declined by 3.5% year-on-year in June, much weaker than expected. The largest negative contribution came from the gold sector, where bullion production showed a drop of nearly 13%. FNB economist Thanda Setola, meanwhile, says the sector is set for a moderate recovery in economic activity. He's added that easing energy constraints and a stable global growth environment should support activity over the medium term. South Africa needs to spend $97 billion annually until 2030 to plug a development financing gap. And those funds should go towards key sectors like education, energy and infrastructure. That's according to a new report by the African Development Bank. The Development Finance Institution recommends that South Africa strengthen its fiscal policy, implement tax reform and boost public sector efficiency. This, it says, will ensure that economic growth does not come at the expense of fiscal health. Sasol's appointed a new CFO. The petrochemicals group says insider Walt Bruns will replace Henry Rousseau next month. Bruns has been with Sasol for 15 years and is currently the chief financial officer of Sasol Southern Africa, including energy and chemicals. The firm says he will focus on driving sustainable value and supporting Sasol's strategic transformation. Strong. That's how Home Choice has described its half-year performance. The group's posted a 36% rise in operating profit to 388 million rand, with the bulk of that coming from its fintech arm. Headline earnings per share, meanwhile, up 37%, and Home Choice has declared an interim dividend of 95 cents, which is 35% higher than the prior period. The firm says its fintech unit is set for more growth as it looks to expand its product range and cross-selling products. The Development Bank of Southern Africa has posted lower annual profit. Lower foreign currency gains contributed to an 11% decline on that end. Net interest income, meanwhile, increased by 18%. DBSA says it's delivered a strong performance and continues to operate financially sustainably despite a challenging environment marked by high interest rates, subdued economic growth and the worsening sovereign debt position of several African countries. Jubilee Metals has kicked off operations at its Rowan facility in Zambia. It's produced its first copper concentrate from the front-end module that will be refined at its Sasol refinery to produce copper cathode, which is used in the wire, cable and transformer industries. CEO Leon Kutzer says this is a significant milestone for the business, which allows Jubilee to expand its production capacity at its Zambian operations. Further afield, the UK unemployment rate unexpectedly dropped while its pay growth plummeted to its lowest in 2 years. This reassured the Bank of England that inflation pressures are easing through official figures that came out today. Let's take a look at this package report for more.
British pay growth dropped to its lowest in nearly 2 years in the second quarter. Tuesday's official figures likely reassured the country's central bank that inflation pressures are easing. Average weekly earnings, excluding bonuses, were 5.4% higher than a year earlier in the 3 months to the end of June. It was down from 5.8% in the 3 months to May and the lowest in 2 years. However, the unemployment rate fell unexpectedly. It dropped to 4.2% from 4.4%, its lowest since February and beating expectations. After the update, investors slightly scaled back their bets on a rate cut in September by the Bank of England. The central bank said it would keep a close eye on wage growth when it cut interest rates in early August. Regular pay is still growing at nearly double the pace the Bank of England thinks is compatible with keeping inflation at its 2% target over the medium term. The central bank expects data on Wednesday to show inflation back above target.
2 years ago, Germany introduced a basic income program that, while beneficial to many, has also sparked significant criticism, with political parties proposing cutting changes. Here's our reporter Anatindevu with more.
That's right, Ndawling, one of 3 governing parties, is proposing to cut the citizens' basic income. This is due to current economic conditions, which of course highlights broader issues affecting social programs and the labor market in Germany. And for more on this, I'm joined by DW's Lars Halter, who is currently standing by in Berlin. Lars, thank you so much for your time. What's the latest on this program?
Thanks for having me. Well, first of all, I guess I need to explain what we're dealing with here, and especially the name of the program. In German, it's called Bürgergeld. That literally translates into citizens' money. And there's a reason why that moniker was chosen. For years before the program was established, long-term jobless people received a stipend called Hartz IV, and that name had become a stigma. You didn't want people to know that you were on Hartz IV. There was even a pseudo-reality show on TV prying into recipients' lives and really giving the program a bad name. Now, when a new program was established by Germany's Social Democrats, they called it citizens' money, and they took away some of the hurdles that people found made it harder and maybe more stigmatizing to even get that help, including the fact that you had to regularly prove that you depended on government help, or that you had to accept any jobs that were offered to you and show a certain willingness to work. Now, indeed, many understand today's Bürgergeld as kind of a basic income program, and now that has led to at least 2 major problems. A lot of people happily take this income and don't bother working, and it's also become really expensive for taxpayers.
And so, Lars, what reforms are then being suggested?
Well, the latest comes from the Free Democrats. That's a center-right party within Germany's 3-party coalition government. They're saying that the program has to, for now at least, to be cut by $20 a month. A pretty small step, but also a pretty easy case to argue. The Bürgergeld has recently been upped, considering latest inflation numbers. Now inflation doesn't seem as high as expected anymore, so it would all be all but prudent to cut the monthly payments too. However, this little step would not even begin to fix the problems the government really has with the Bürgergeld. The party and others have long suggested to levy stricter sanctions and cut the social program for those who are entirely unwilling to participate on the labor market.
And so would this come down to the man on the ground, the taxpayer, Lars?
Not really. Most people in Germany do support a strong social system that supports the weak. But of course, any entitlement program costs a lot of money, so one has to look into the details. Who needs help and who gets help and how much. And the Bürgergeld has indeed turned out to be so generous that in some cases recipients make almost as much money as those working in minimum income jobs, especially part-time laborers. And now that does not only seem unfair, but it also disincentivizes people to look for a job, and that in turn threatens to weaken labor markets, where currently we're looking for lots of skilled people to fill positions that companies had open for too long. Of course, it's easy to see how balancing the needs of some people and what's best for the country and the economy as a whole is quite complex. But it seems clear that broader reforms are necessary, and latest numbers pointing to lower inflation give the government an in here, an opportunity to make some changes.
Well, let's leave it there for now. Lars, thank you so much for those updates. That was Lars Halter, who is with Deutsche Welle.